In this video, guys, we're going to look at golden rules for trading high volatility. Stay tuned. Hey traders, warm welcome to you. All right, so markets are swinging wildly at the moment. If I look disheveled, it's because I feel like I've done like 1,000 rounds with Mike Tyson. Market's down to the floor, it's back up, it's down, it's all over the place. Now, the good thing is volatility, we'll skip straight to number 3, volatility does create opportunity, but there are lots of downsides to volatility. Now, we love volatility as traders, but there's a kind of sweet spot, right? When it's too wild, it's just different market conditions. It's just crazy, it's just swinging around, and it's dangerous. There's a sweet spot of opportunity because it's moving, so it's at levels, it's testing levels, it's breaking out, it's continuing. You've got a lot of things to get your teeth stuck into. You know, commissions become almost much less relevant as well because the moves are much greater than what you're taking. So it's opportunity and it's useful and it's good and it's a great time to be a trader, but we need to just be very, very careful. So some golden rules for volatility. Number 1 is do not get seduced. I know it's there and volatility's there and it's kind of sitting there and it's looking at it and it's going, oh, look at me, aren't I sexy? And you're like, oh yeah, volatility, and you see it, you think, oh, you know, I'm going to get on top of this, I'm going to get on this market and I'm going to make a lot of money and you know, yeah, it's going to make me so much. And you start going into this volatility thinking all it means is money, 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 and you get seduced by it. You're going to get trapped. It's going to suck you in and it's going to spit you right out because volatility needs to be respected. And yes, there's opportunity to put some money in the bank during volatile times, but there's also opportunity. There's also a good chance that you devastate your account if you're not careful, especially if you're new to volatility. So watch out. Don't get seduced by it. Don't let the market seduce you with its sexy up and down swinging and moving and candles and all this and levels being broken and breakouts and big ranges. Don't get seduced by it. Say, okay, fine, but there's opportunity. Doesn't mean I have to be in there with big size swinging around and hoping that I'm going to make a lot of money. Not the way to do it. All right, number 2, guys, is watch that chimp. So we talk about mind management. Is it Chimp Paradox? I forget the name of the book. We say it so often. There's a chimp in our mind that's saying, hey, I know, making us break our rules and trading emotionally. That comes alive even more, amplified during volatility, because it's, you know, it's up 1 minute, then all of a sudden you're up loads and it's down and it's this and that. Watch out for it. Just be very mindful. Just relax. Just trade it. By all means, with some more rules in a moment, but just relax and be aware that it can get frustrated quickly, it can get angry quickly, it can feel like you're the hero quickly. Your emotional thermometer is swinging like this, it's boop, 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 and the chimp loves that, and he'll make you do stuff you don't want to do. He'll make you take trades, overtrade, trade too much size, get angry. So just watch that chimp. Be extra careful of the mindset of being focused and calm and being just very thoughtful and mindful of your trading, much more in the high volatility environment. So I said number 3, volatility is opportunity. If you frame it like that, rather than volatility is money, it's just opportunity. It sometimes changes the way you can approach it. Number 4, dial down the size. I think it goes without saying, guys, if you're used to 100-point daily swings and it's now doing 800-point daily swings, you're gonna have to reduce your size accordingly. And that means individual stops as well. No use using those little 50-point stops that you were using before, 30-point stops. It's just noise. 1 minute candle is going to rip it out. So understand, let's do both. Dial down the size and widen the stops. So the risk is the same. So if you were saying, hey, I'm risking $500 on this trade, per trade you normally do, let's say risk a couple of grand per day. I mean, that's a bit much, but what do you get the idea? Now you say I'm risking the same, my stops have got to be so much wider, I've got to use like a 150-point stop. So you dial down your size accordingly. If that means going to the micros, if you're trading the mini futures, go to the micros, or trading a minimum pounds per point if you're spread betting and CFD trading. Or, little tip guys, if you're trading CFD or spread bet and your provider allows it, rather than trading the index, trade the ETF. So SPY, diamonds, you can use much lower size and much lower exposure if you need to. So dial down that size, widen those stops just to accommodate the volatility. You don't want to be using the same size and the same stops because you'll get death by 1,000 cuts and the size will amplify your emotions. So dial those down, understand there's volatility and adjust for it. Adjust your business model to suit the conditions that are presented to you, not the conditions that you want. 6th and final thing, guys, don't worry if you can't trade it. You know, it's not a big deal. I would rather be an absolute expert at normal market conditions than someone who trades volatility very, very well. Now, as it happens, over time, you will learn to trade volatility, but you don't have that much exposure to it. You don't have this extreme volatility you're having now very often. So, you have to be in the game for kind of 5, 10, 15, 20, 40 years to see different periods of volatility and know how to take advantage of it. So if you're struggling to trade it, don't think, oh, that makes me a really bad trader. No. Focus on when things calm down a little bit. Focus when things are more normal conditions. If you can become an expert in normal conditions, that's the perfect place to be, because that's what it is most of the time. And you go, whoa, volatility's up a bit. It's not for me. I get involved when I want to get involved. I'm not interested. Step back. That's okay. Just stop trading, stop the damage. Don't feel that you're a trader. I've got to swing around with the size of volatility. I should be killing it during volatility. Don't feel that. It's a trap to fall into. Watch it, learn from it, observe, take notes so that next time you're ready, and maybe you can take advantage of it, maybe you can use it as an opportunity. But if at the moment it's like, I just can't get on there, it's getting stopped and getting frustrated, just stop. Just enjoy it, watch it like it's a movie. Sit there and just watch the volatility and just enjoy the markets like we do, guys, like the nerds we are that could sit in front of our trading screens going, oh, look at that. Oh, yeah. Oh, that's nice. Just do that. Don't get involved with it. Don't have the pressure of risk, managing risk in it. Just say, you know what, I'm just going to watch it. Or trade very, very small and it's almost meaningless. It's something like that. So don't worry if you can't get a grasp on it. Learn from it so that you're ready when volatility hits again, because it's cyclical. It'll contract, it'll expand, contract, expand. And who knows how long this is going to go on for. Anyway, guys, golden rules for trading high volatility. Keep ourselves alert and making sure we're not doing any damage. All right, guys, take care. See you next one. Bye-bye.